As the world goes digital, one of the biggest transformations we're witnessing is in the realm of money. Central bank digital currencies are emerging as one of the most talked about innovations in finance. Imagine a world where the money in your wallet exists purely in digital form, backed by the central bank, and available at your fingertips. CBDCs have the potential to revolutionize the global economy, reshaping how we transact, manage money, and understand finance as a whole. So what exactly are CBDCs, and how could they change our world? Let's dive in. What are central bank digital currency? A central bank digital currency is a digital version of a nation's official currency, issued and regulated by its central bank. Unlike decentralized cryptocurrencies like Bitcoin, CBDCs are fully backed and controlled by the government, making them a stable, official representation of a country's currency. Think of them as the digital equivalent of the cash you carry in your wallet, but without the physical form. Central bank digital currencies are different from the digital payments we use today, such as bank transfers or credit card payments. The key difference is that CBDCs are not tied to private banking infrastructures. Instead, they offer the public a direct link to the central bank, bypassing traditional financial intermediaries. Why central bank digital currencies are gaining traction? Over the past decade, CBDCs have gained significant traction. The decline of cash, coupled with the rise of digital payments and the growing influence of cryptocurrencies, has prompted central banks to consider digital alternatives to cash. China's digital yuan has been leading the way, with pilot programs that have already reached millions of users. Other countries like Sweden, the European Union, and even the United States are actively exploring their versions of digital currencies. Governments are motivated to develop CBDCs to keep up with rapid financial digitization, maintain control over their monetary systems, and respond to the growing popularity of cryptocurrencies that could challenge financial stability. CBDCs represent a chance for central banks to innovate while also creating new opportunities for financial inclusion and efficiency. Enhancing financial inclusion. One of the biggest promises of CBDCs is improving financial inclusion. Despite technological advancements, millions of people worldwide remain unbanked. They lack access to formal banking services due to geographic limitations, lack of documentation, or distrust of financial institutions. CBDCs could be a game changer, especially in developing nations, where people with just a smartphone could access digital money and bypass traditional banking systems altogether. Imagine someone in a remote village with no access to banks. CBDCs would allow them to receive government aid, participate in the digital economy, and make or receive payments, reducing poverty levels and increasing economic participation globally. Streamlining cross-border payments. Cross-border payments are notoriously slow and expensive, often requiring multiple intermediaries to process transactions. Central bank digital currencies could significantly simplify and speed up international payments by creating direct central bank connections, reducing costs, and removing intermediaries. This could make international trade more efficient and accessible, providing a boost to the global economy. Additionally, central bank digital currencies could reduce the costs of handling physical cash. Governments spend significant resources minting, transporting, and securing cash, costs that could be reduced by transitioning to digital currency. New tools for monetary policy and stability. Central bank digital currencies could also provide new tools for implementing monetary policy. Currently, central banks influence the economy through indirect methods, like adjusting interest rates and reserve requirements for commercial banks. This, however, could enable a direct approach to influencing the money supply. During an economic downturn, for example, central banks could distribute central bank digital currencies directly to individuals, providing immediate stimulus. These also make it easier to apply negative interest rates, essentially encouraging spending during periods of economic stagnation. By having real-time data on money flows, central banks could better assess economic conditions, leading to quicker and more effective interventions during crises, thus promoting greater economic stability. Combating financial crime. Central bank digital currencies could be a powerful tool in combating financial crime, including money laundering and tax evasion. Unlike cash, which is difficult to trace, these are inherently more transparent, allowing authorities to monitor transactions and identify suspicious activities more easily. That said, privacy concerns are a major consideration. To strike a balance between transparency and privacy, governments would need to develop a framework that protects users' data while allowing the oversight necessary to fight crime. A privacy-preserving but secure approach would be key to maintaining public trust. Challenging cryptocurrencies and stablecoins. The rise of cryptocurrencies has posed a challenge to traditional financial systems, creating decentralized money outside the control of central banks. These provide a regulated alternative, offering the convenience of digital transactions without the volatility associated with cryptocurrencies like Bitcoin. By providing a stable digital alternative, central bank digital currency could reduce the allure of private cryptocurrencies and prevent privately issued stablecoins from gaining too much influence. This helps central banks maintain control over monetary policy and financial stability, improving government efficiency and transparency. Central bank digital currencies also have the potential to improve government efficiency, especially in welfare distribution. With a digital currency, governments can directly send financial aid to citizens' wallets, reducing administrative costs, eliminating middlemen, and reducing opportunities for corruption. Additionally, the transparency of these could help restore citizens' trust in government institutions. When people can see exactly how public funds are being distributed, it increases accountability and faith in governance. Potential challenges and concerns with central bank digital currency. While these offer exciting possibilities, they come with challenges that need careful consideration. Central bank digital currency would provide central banks with detailed transaction data. While this could help fight crime, it also raises privacy concerns. People may fear that governments could track their every financial move, so a balance between oversight and privacy must be established to ensure citizens' data is protected. Central bank digital currency could also disrupt traditional banking systems. If individuals hold their money directly with the central bank, commercial banks might lose deposits, which are crucial for lending. This could limit banks' ability to issue loans, affecting credit availability and potentially impacting economic growth. Finding a way for these to coexist with the traditional banking sector is a crucial challenge. Central bank digital currency would also rely on digital infrastructure, making them vulnerable to cyber attacks and technological failures. Ensuring the security of these systems is of utmost importance, as any vulnerabilities could lead to financial instability or significant losses. Additionally, while these could enhance financial inclusion, they could also unintentionally exclude individuals who lack access to digital technology. Governments would need to find ways to bridge this digital divide, ensuring that all citizens benefit from central bank digital currency. And that's a wrap on today's deep dive into central bank digital currencies and their potential impact on the global economy. If you found this video of the future of money, be sure to give this content a thumbs up, and don't forget to subscribe for more content on finance, technology, and the future of the economy. Stay informed, stay curious, and we'll catch you in the next one.